Hey guys, Brian here. Welcome back to the channel. And my portfolio is very close to its all-time highs from a few months ago. And that's not even, and we're not even like close to the all-time highs of the market. We're still down on the S&P 500 and the Nasdaq from when those were at their all-time highs. So how did I do this, right? So the easiest answer is that I've been doing cash secured puts and covered calls. So I'm constantly still collecting income, premiums, more money into the account while holding the same stocks that I've had since the previous all-time high, all the way through the dip and all the way back up. So it's obviously been a few weeks to a few months since then, and I've just constantly been collecting premium. Since January, I've collected over like 30K in premium. Obviously, there were some stocks that I sold at a loss, which is fine, but constantly been able to collect premium and continue to grow the portfolio. And that's what I want to talk about with cash secured puts and cover calls, the wheel strategy, is that it is, in my opinion, the easiest way to continuously grow your portfolio. And I know this might hit certain people a certain way when it comes down to growing your portfolio. People say it should be more so just buy and hold, right? Which is fine. I'm totally for that. I have some buy and hold in my portfolios as well. Like if you just keep your money in a like S&P 500 index fund or ETF or total stock market index fund, you keep it in there for like 30 years. Yeah, you'll become a millionaire, but obviously I want to get there a little bit quicker, and I believe the best way for me to do that is do what I'm doing now, selling cash secured puts and covered calls and using those premiums to either buy those index funds with like the free money that I'm getting from this to go into like safer assets like those index funds and ETFs. But so for this week, because we've been having a crazy like bullish week, I did get into like deep water with some of my covered calls being below cost basis. And what I did this week is I decided which ones I want to keep and which ones I want to roll out. And the reason why I just don't roll out all of them is because I did start using some margin. So, and I know people might be saying, oh, you're so crazy using margin and borrowing money, but I also do believe that it's the most efficient way to use your money and make more money if you're pretty diligent with what you're investing in and weighing the pros and cons of each. And obviously, I'm not telling anyone to use margin all the time or anything like that. Not financial advice. This is personally what just I do. So I do have like a margin debt where I will be paying off as I go. And what the beautiful thing is with this is that like it's around like 15K now. And the way that I've been paying it off is through the premiums and through selling some of these covered calls, whether it's like a little bit below cost basis, at cost basis, or above. So obviously, when I sell, I'm losing out on some appreciation, but I've also felt like I've made enough money from the premiums, and I don't really like rolling out my covered calls too far. And for some of these stocks, like for Tempest AI, I had a few covered calls below cost basis, almost like $9 below cost basis. So I'm like down like $900 on those. And because they were through margin, right? The only way I'd be able to get a credit if I rolled, it'd be closer to October or something like that. And it's like just too far out. I don't want to hold that long, and it's also at a strike price below the current stock strike price that below the current stock price that it's at. So it's like holding it. Yeah, I could capture the appreciation. I could sell for at cost basis or something, but that'll be in October. And I feel like that would be holding up too much money or too many shares, pretty much too much money that I could use to make up the difference faster. Like, so for Tempest AI, that's like 4 or 5 grand that I'm holding up till October. If I just sell it now, take that $900 loss, I could probably go back into Tempest AI myself and start selling cash secured puts and probably make that $900 back pretty quickly. Or I could put it towards like Palantir, Nvidia, something like that. Some stock that I'm super bullish in, where I could get the money back fairly quickly. So that's personally what I did. I took a look at which stocks I'm cool with selling at a loss for these covered calls, pay down this margin debt, and then go at it again. Like, I'm not afraid of margin debt because I have enough cash elsewhere that if I really needed to pay it off, I can. That's the only time where I like even suggest maybe using margin and going to a little bit of like margin debt is only if you have the cash to pay it off. If you don't, do not do it. Don't put yourself into debt over stocks because the market can swing so fast that you'll just get buried and hurt doing it. So that's what I personally did with my covered calls. And then I've also been doing a lot of cash secured puts or naked puts since I'm using margin to collect a few $1,000 every like 3 weeks. And those $1,000 end up paying down the margin as well, margin debt as well. So it's like using margin to pay down the debt, because if you're using margin as a naked put, right, you don't accrue interest on the money because it's considered cash at the point, the simplest terms of it. But obviously, if and when you get assigned, that's when you'll accrue a margin debt and you'll have to start paying interest on it. Again, not something that I recommend for anyone to really go into until you're more seasoned as a trader or just investor. But this is personally what I do, especially when I see market run-ups like this. I want to take advantage of either appreciation or either the spreads that are going to happen. So for me, for instance, I did 3 contracts of Palantir at $96, and now it's like at 111. And I also have another 3 contracts as well using margin at 100. And that also, both of those gave me around like anywhere from $1,200 to $1,400 each. And each of those help pay down the margin debt. So whenever I do capture the appreciation from any of the things that I did buy off margin, all the appreciation goes to me, right? Because paid down the debt already. So these are my shares. I used cash. That's how you could kind of look at it. And then I start profiting that way, right? And also what I also did with whatever stocks that was still, my strike price was still above the stock price, and I felt like if they were going to move higher, like some of my Tesla covered calls, I decided to roll them out a month, 2 months, and to a way higher strike price, closer to cost basis if it was below cost basis, or just up and out to a place where I would be okay with selling my stocks for whatever appreciation that I would get, so I could get that capital gains. So this is like personally what I'm doing and what's been working for me the best. And I also closed a lot of cash secured puts that are now far out of the money because the stocks just rose up. Like I have a bunch of Sofi like that. I had a few Palantir like that. So I closed them out, collected anywhere from like 60 to like 98%, 92% of the premium, bought to close those, and then I freed up the money again to do more cash secured puts. So like anyone that is, even myself, anyone that's like trying to teach you the wheel strategy and saying that you have to go into like a mentorship or pay for it, you don't really need to. I'm going to say that out loud, even though I do have a course, even though I do have select like mentorships. Like those are for people that want something more streamlined and like spoon fed to you. But if you really want to learn the wheel strategy on your own and learn it and learn how to do it correctly, and then go into like margin or go into like tier 3 option trading, like you could find all of that online, and you really don't need to pay anyone for it. So that's my transparency post that I'm going to go on this, because guys, making money is as easy or as hard as you want to make it in the stock market. And again, I just want to be super transparent with everybody. So again, close to all-time highs again. I'm about like 4K away from all-time highs. I believe I'll pass it in 3 to 6 months, depending on like how the market goes. It should be closer. And hopefully I hit that 100K in that public portfolio by my birthday in July. So like 3 to 6 weeks. So to get back to all-time highs, and as long as the market keeps like running up, I do believe I could get to that 100K in this public portfolio, which is currently sitting at like 81 or 82K. So I believe as long as I keep doing what I'm doing, closing out what I can, capturing the appreciation when I can, keep collecting premium, no matter how big or small it is, it's all going to compound, and it's just going to keep growing and growing. So again, if you want to learn more, I do have a free Discord that I run with my friend. It's called Clockout Capital, in the links down below. And you don't even have to worry about subscribing, because guys, I'm pretty sure I'm going to see you guys very soon. So if you can, just like, comment, and subscribe if you like what I'm talking about here, and I'll see you guys very soon.